It's time.
Hey, Tiny, you gotta clean his windshield?
Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Hello, good morning, and welcome to mentfx traders. So today I want to jump on for a quick second, talk about some technical sauce that I want to share with you, and talk about the simplicity in which your approach to the market can look like if you give yourself the time to study, to understand, and to follow multiple markets at the same time to see what's actually going on. And I mean, right here, right in front of you, you can see one of the trades I took. Very simply, as a lot of you might know, I've been scaling my system a lot more. I've been working it up to the higher time frames, working on a lot more of the ICI criteria, as I discussed in the last few videos. Very simply, it's an impulse, a correction, and an impulse, and I'm looking to enter right around here on any given trade. So this is the kind of the blueprint for entry, and you can do this on all time frames, which is a beautiful thing. And I've spoken about this a few times in my most recent videos. Of course, it's taught in the private mentorship, and that link is below. Have a read of that, see why I do what I do, see kind of what's been going on the last 2 years. But today, I want to jump into how you can scale a system for yourself, what you can do, and add another bit of tool to your tool belt. Bob the Builder style, right? So today, what I want to do is I want to talk about this specific gold trade and how and why it was that I took this, why I entered it, why I managed it the way I did. Well, management's pretty easy. I mean, that's just based on your own testing. But why I managed it the way I did, why I did very well, why our members and students continue to do the same thing. You know, we were kind of just messing around here, but what do you know? The exact things we discussed would happen, did happen. Let me go up here and show you guys what I mean by that. So I sent out a little sauce to the team as well, talking about, you know, what's going on, why I did what I did, how it actually works, how to think about it. See if I can find that. Maybe it was a little bit further down. I don't remember exactly where it was. We have a few people trading the longs, as you can see, on the XXX USD pairs and the XXX JPY pairs, which is a beautiful thing to see. And yeah, so I'll actually show you where this came from, but just keeping it very simple, you know, this was basically my entire outlook, my entire crazy rocket science that decided that I'm going to take along here that is now, you know, I mean, delivering way more than enough. As you guys know, one thing that I teach is that as a mentfx member, as someone that learns from me, I don't teach you guys to get in right there and then get out right there. I teach you how to understand where you are, what the underlying trend is, where the market's likely moving, find the best potential area and criteria for the market to keep moving in that given direction, get in, take your money out based on your win rates, based on your RRs that make sense for your system, and walk away from the day. And it can be as simple as that for your entire trading, right? I'm not here catching the very, very top, like a little Instagram, you know, little bunny on Instagram. I'm not here getting in at the very low or the very low and predicting the whole move, because that's not what's necessary. That's not what you do as a trader. If you're someone that wants to pick tops and bottoms, constantly be in a trade, all this fun stuff, there are plenty of industries out there for you. Trading is not one of them. Okay, so I sent this out earlier. It's a very, very simple setup, right? It's literally based on, and then we're going to break this down in this video today, on GU longs, or the understanding that XXX USD pairs are long, and then relative strength showing up on gold. So let me actually open this and make it a little bit bigger for you guys. And then relative strength showing up on gold, and therefore starting to stock, as you can see right here, for ICIs, that being an impulse, correction, impulse. And you can see very quickly, impulse, correction, and then I entered through a buy stop on the next impulse with the anticipation that it's going to start a larger impulse leg. And we'll talk about that today. We'll jump into a little bit of the ICI methodology as per mentfx. Of course, the private's going to have more of this. We have 1 to 2 hours every single weekend that we talk with the team, Q&A, break stuff down, show more stuff, etc. And what I want to do before I jump even a little bit further is, as we keep going through this, So we have some other members that are in the XXX-JPY pairs as well, because we're actually bullish on both. And some people don't understand that, but something that I've taught is that correlation and this anti-correlation, DXY, all this crazy stuff doesn't matter. What matters is you understand how baskets of the same assets, XXX-USD, Euro-USD, Gold-USD, GBP-USD, how those baskets, when they have synonymous contexts, when they're moving together, how to use the fact that all of them are showing you from a basket what they want to do, how to separate them now and look at relativity, right? So that's the very powerful thing in actual correlation analysis. Correlation analysis, in my book at least, is not trying to pinpoint what low's going lower, which one's going higher, where's the divergence, where's the RSI. You know, that stuff is, it's part of a different discipline, and if you like that, then follow that. But today I'm going to show you how to take a basket of goods, understand where that basket is heading, just like I've been getting on every single week now with you guys, talking about how XXX USD pairs are likely going to be bullish and move bullish. XXX JPY pairs are likely going to be bullish and keep moving bullish. And that's exactly what we keep following. And that's exactly the kind of moves that keep coming in just beautifully, beautifully, beautifully on repeat, right? So as we jump into here, right, you have some people trading the XXX JPY pair long. Let me see where this was, because there was something beautiful here that we were, okay, so thank you, Ment. So we just had a webinar yesterday, and for him, right, this is now clicking for him what he needs to do, which is a beautiful thing to see, as always. Let's scroll down a little bit here. There's just one thing I wanted to show you guys before I go further. You guys are getting a little bit of sauce about what's going on, but you can see right here we have Chris posting a little message with what I posted this morning, showing the actual analysis from an ICI and relative strength perspective and how to think about it. And we're going to break this down. You don't have to pause or anything. I'm going to break this all down for you in a second. And he basically says, I'm starting to understand what you mean now when you say you can see the strength and the volume coming into the market. And when I say volume, I'm talking about the volume bars. I'm talking about actually understanding how money's coming into the market and where money is likely to result in explosive moves, right? Both XXX-USD pairs, but one with way more volume. We're going to see what that looks like. And, you know, as we keep looking, here's the continuation of that same move that I sent out, that I discussed with the team on Sunday as well. And as always, right, lo and behold, I only do this for the sake of brand new people, or the people that are used to kind of the dog shit side of mentorships, where basically both made the same move, gold impulse, got to the same area with strength, exactly. So he understands why I took this, and we're going to break that down today. Exactly how I'm about to react. Let's see what he said here. Okay. And per usual, you know, so King Von Zell right here says, per usual, didn't you call this in the webinar? I said, yes, of course, per usual. Facts, everything makes more and more sense each day. Per usual. The people need to tune in, right? It's getting very repetitive and easy, pretty funny. And I said, look what the week one did, because I sent out this exact thing as per the week and what would be weak, and GU ended up being weak. What do you know? Right? All trades win, boring, whatever, all the fun stuff. Just showing you a little bit about what's going on in this trade talk every morning, right? This is just the last like 30 minutes. We have a very, very active group. Everyone contributes, everyone shares, everyone grows together. So, and there's no toxicity that comes with it, which is a beautiful, beautiful thing, because everyone's working together for the same goal, right? So what I actually did, let me go ahead and do this. What I did is I sent out the underlying understanding of why I shared. Here, let me actually make this larger so you guys can see it again. Let me drag this over. So let's do the quick image explanation and then jump into the video explanation of what's going on here, okay? So this is kind of the underlying analysis I sent out to really just cement the concept home. And notice there's not a lot of stuff. It doesn't have to be complex. There's no rocket science. I just put them up side by side so people understand. One thing that's really important, and we discussed this in the webinar this Sunday and the one before, is that we assume this is absorption. And we'll talk about why shortly. But simply, there's an institutional leg here. This is acting as reaccumulation, coming into a larger S&D zone, SSC, showing you where price likely wants to head. And as that continues to hold, we assume absorption. So very simply, as I got onto the market today, right, all I need is to understand that generally XXX-USD pairs are still moving long, and that the market is still moving long in general. So I know the basket, okay, of XXX-USD pairs are wanting to move long, which means that if I look at EU, what do you think I'm expecting before I even look at it? That it's likely going to move long because it's in the basket of what GU is doing, right? If I look at gold, before I even look at it, what do you think I expect about it? That it's likely going to move long because it's within the basket of XXX USD pairs. So the first thing you need to do is identify the basket, right? USD JPY, GBP JPY, AUD JPY, that's its own basket. multiple stocks that could be their own basket. Multiple different futures can be their own basket. US 100, US 30, SP 500, that's their own basket because they all move in tandem because they're basically the same market with minor differences, okay? So GU, we did a full-on outlook on this pair. Let me go ahead and jump into that outlook for you guys today so you understand what it is that we looked at before we ever actually got into the trading week this week, because this is Monday now and I just had my first trade and it was a great trade to start off the Monday. But what is it that led to this understanding? Well, very simply, once again, as we turn on our mentfx structure, which is an indicator that is made available to you for free. You don't have to pay me for it. Please remember that. All you have to do is go to trading view, go to indicators here and type in mentfx structure and then just add it. And then you can change it up for colors and stuff to make it look better. But very simply, here it is. You can see it with these light lines on my screen. I'm going to make it a little darker for you so it's easier to see. I'm going to make it like a 23%. There you go. So it's much easier to see. And all we need to do initially is understand where we belong in this underlying trend at the moment from a standpoint of where's money moving, what's happening from left to right, what kind of range are we in, and what can be the expectancy of said range. And very simply, for the last about this many days, so for about a year now, we've started being bullish on most XXX-USD pairs. You guys might remember I made tons of videos on EU recently talking about these initial breaks, talking about the continuation breaks, talking about the reaccumulation models that we see here, and those are by way of protected lows shifting down, but expecting price to continue long, which is what you see right here. Protected lows shifting higher, price breaking down, and then looking to continue long. Price re-breaking down, and then looking to continue long. And that's exactly what we've been trading to see that happen. And you can see that that hasn't changed yet. Many people are going to be on the other side. Many people are going to be creating what we call, in the last video that I had with you guys, clouds of liquidity above. And we, as trend followers, simply assume that the trend is not over, and we wait for our given setups to continue following trend. So EU, I've made tons of videos about discussing this long bias. Now on GU, you have the same thing, but it's a little different. This is the idea of the snowflake as I teach it. Different markets deliver in exactly the same ways over the last 100 years plus. The only difference is that they act as snowflakes. The way in which they deliver can be different, is going to be unique in its own right, is going to be a little bit different than the last market. This is the idea of snowflakes. None of you see a snowflake and then see another snowflake and go, that's not a snowflake, it's all bullshit. You go, that's a snowflake, but if you look at them close, they both look like different patterns. This is why I teach you guys not to think in patterns or a specific little holy grail break and retest and like whatever it might be, break and retest, change of whatever the fuck it is, right? I don't teach you to think in this like specific, this is the only systematic way, you must understand the systematic way, it's a simple systematic thing. It's like, that is not how markets move. The markets move in snowflakes. You need to understand what they are, right? Because as you spend time looking at markets, you know what's an accumulation, what's a distribution, what does a reaccumulation look like, what does another reaccumulation look like. You know they're reaccumulations, but they may look different. EU and GU look very, very similar, but there are nuances and differences. EU, for instance, broke bullish, 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 broke bearish, bullish, bullish, broke bearish, and delivered bullish. And we've been bullish on this the whole time. GU, on the other hand, broke bullish, bullish, started breaking bearish, re-broke bullish, started breaking bearish, broke bullish a lot of times, re-broke bearish, and is now breaking bullish again. There are nuanced differences, but both markets are undergoing the same snowflake reaccumulation. And that's the most important part of this, because that's what keeps you on the correct side of trend. And that's what also, again, creates that basket of goodies for you, so you understand what the underlying basket wants to do. You need to know where the basket needs to go, right? And if we understand, on average, that GU, EU, XAU, USD are all undergoing snowflake versions of, at the moment, reaccumulations, we know that underlying money is moving that market long. And if we know that money's moving it underlying long, we don't need to sit there looking at DXY or USDCHF to understand the differences, to find out which market's going to do what, because they're uncorrelated, they're not important. What we need to know is which ones are baskets, and then in the basket, which ones are the strongest. So the idea of this is, if you had a little basket, you know, little Red Riding Hood, and you had apples in there, if you open the basket, let's say 2 days later, because you're starting to starve in the forest, you're running through the forest with a basket and you're starving, and you open it. One apple has like a worm crawling out of it, okay? Another apple is already getting like brown, and there's a fly, and the fly is like eating it or whatever, right? Another apple is just like it's just cut in half for some reason. And then there's one apple and it's just green, okay? The question here is, what apple are you gonna eat within that basket? Well, if you're not stupid, right, the likelihood is you're gonna eat the green apple that didn't get infected, right, or that doesn't have other deficiencies. Similarly to baskets of markets, you can have multiple XXX USD pairs, gold, GU, EU, moving to one side. That's fine. They're all apples. They're still in the basket. But in any given moment, one of them is going to be the green apple, the one that is very healthy, the one that hasn't had any issues, the one that is moving clearly. And what that looks like is what I'm going to show you in a second. But the reason we look for that is because if we can find the healthy one, then we know money's behind it. That's what it really looks like. To find the healthy apple in the basket means to find the one with the money that's behind it. And if you can discover and see where the money is, well, then when you get involved, you give yourself the best probability of being with the large money, which means that if the move happens, and even if the other baskets still fail, the worms are crawling out, the flies are eating the fucking apple, the green apple is going to remain healthy. And even though you might be wrong, you could still make a shit ton of money because you're still behind the move of the cleanest mover, because that's where the money is. So as we can see from the basket, on average, every single pair here is undergoing reaccumulation or is moving long. And this hasn't changed for over a year now. And funny enough, most people have been short on this nonstop. And if you want to learn more about that, I have infinite free YouTube videos here publicly where you can learn more about that with no issue whatsoever for completely free. Otherwise, you got one of the best places in the world, which is the Mentorship, where I teach all of this stuff. I teach it every single week, and I actually go through examples, and you see me break it down over and over and over again nonstop, right? So that's just something to remember as we dive a little deeper today. So GU clearly undergoing general bullishness, and most recently, as we can see, it's undergone reaccumulation, and is moving long, is breaking long, moving long, breaking long, moving long, and very simply, the expectancy is that price wants to break long, continue long, and keep moving long. Now, we don't know where that's going to happen from, but what we do know, at least here on GU, is that if we follow our basic formula for SSC, as this price began to pull back, we're just waiting, right? If we follow the last unmitigated portion, so if we follow all these, you can see, if we choose this candle here, you can see it's mitigated. If we keep going, right, if you just keep following this, everything's mitigated. Again, I have videos on mitigation, on unmitigated zones. Everything's mitigated, everything's mitigated, everything's mitigated, everything's mitigated, up until you get to this candle, at which point you finally see it's supported by, as we love to call them, imbalances. Again, we don't force imbalances. We understand how they work for unmitigated zones. There's nothing to do with this imbalance. It's important. I would never be looking at it here to try and determine or take trades off of it. Doesn't make sense. And then all we did is we took this zone and refined it to the further wick here, because that's an example of an SND. So now we have an overall SSC that we can work with. And in the case that price either wants to keep going, we can follow it on a lower time frame, or if it comes here, we can begin to look at what we like to call this relative strength between baskets. Okay, so GU came and traded into this daily zone. By the way, just so you guys know, all of this is not hindsight. This was, now it's live price now, but this is all and was broken down way before it ever happened in the private mentorship. If you want proof of that, feel free to join up. Instantly cancel your sub so you don't get renewed, and go and watch webinar. Let me see what webinar is most recent. Go ahead, check in, and then watch webinar 112 and 111. Those are the most recent webinars on Sunday before price ever happened, and I spoke about exactly how this price was going to deliver. So just remember that, right? If you're new, hopefully that sways you, and if you've been here for a while, you know what's up. I'm going to continue now. So GU is very long. It's showing long. The SSCs are moving long. Everything that I teach on this channel, everything that I teach privately, everything is showing nice long. Okay, very easy. Now, as we jump down to a lower time frame, in this case on the 4 hour, what we see, once again, from a left to right, using the same indicator of understanding of structure, is you have increasing protected lows, which is a very bullish sign, followed by the breakdown, which we instantly assume, as per our previous videos, as a reaccumulation model, because we understand how the snowflake reaccumulations exist in markets. And at the same time, what happened is on the 4 hour, it actually rebroke long, making this an SSC to the top side from a higher time frame zone where we expected the SSC to already deliver long. Again, if this fails down, there's nothing for me to touch. I simply walk away and wait until the market wants to show me that money is still behind it. On the other hand, if this begins to hold and give me the models that showcase that money's behind it, now I can start following it. This is what being a trader means. Being a trader does not mean showing up every day to trade. Being a trader means showing up, understanding what you're looking for, and waiting for that thing to happen. So simply, we got this move, SSC-wise, from this low up to this high. That creates this SSC leg. And now, very simply, we can use this beautiful understanding of absorption where price can break this low, but we assume absorption due to the fact that we already have an SSC that wants to move long. So we understand that a break of this is acting, in many cases, as absorption of those orders to continue a move higher. And we know also that when this happens and a breakdown like that occurs, it's almost better because every other trader on every other time frame is now going to start forcing the shorts, as you all know, from all these areas here, which by and large, as we all know, creates the clouds of liquidity that I spoke about in my last video. Okay? And again, notice how this is all a buildup too. So make sure you're watching my previous videos if you're learning from me here publicly. So if we go to the 1 hour now, very simply, this is the exact analysis we had. We understand that now this is a snowflake accumulation model. Very simply, the price came down into an area, price began to break long and deliver SSCs long. Now, I'm going to be honest with you guys. Ready? This is going to be crazy. At these points here, my expectancy was to see price continue making SSCs higher and expanding higher. That was my expectancy, and that's it. Instead, price began to break down. Now notice how price breaking down did not result in losses or large losses for me. The reason for that is because I'm not on the side of trading where I'm consistently getting involved everywhere, anytime, getting long, letting my stop loss get bigger, taking huge losses, martingaling down, averaging down. All that happens is that no confirmation's met, no money comes in to support the move that we're looking for, and sometimes, and this will happen a lot of the time actually, there will be flushes. And most people are going to basically create terrible emotional decisions around flushes like these, like starting to now force certain things, start thinking that what they were doing was correct initially. But nonetheless, I'm going to be honest with you guys, I was expecting the bullishness. Price broke down instead. That's good. So I walk away very simply. Then around Thursday, Friday, price begins to get under this low. So again, this is section 1 material of the mentorship, very simple, but I'm going to break it down for you because again, it's section 1. Section 1 through 3 of the mentorship is very, very foundational, but simply, even though there's multiple protected lows and protected highs here, because of the 4 hour, this low to this high on the 4 hour as just an SSC, but also on the 1 hour as an overall accumulation, because this accumulation started from this low, this acts as its own institutional SSC range, which basically means that you can expect something along these lines. And again, this doesn't have to be a higher low. This can be an absorption low as well, which is exactly what we're seeing here. So that's what I highlighted for the team. I basically highlighted the fact that we are likely undergoing absorption. I'm gonna show you exactly that. Again, this is all recorded for the team, but it all happens, but I want to show you guys because I think it's important that you see that we assume these things and we do these things way before they deliver. It's very important that you understand that because that's what creates the underlying assessment in your mind that, oh, okay, so this is something that, you know, he was already looking for years ago. So here we are. I sent this out to the team on 07/27. Okay, so very simply, this is exactly what we sent out, right? Price began to break down, and very simply, we assumed absorption, and we had two things in mind. One thing is that we begin to make SSCs long to deliver long, or we break down a little bit lower to this point to make SSCs long, at which point we can follow the longs. And if that doesn't happen, we simply walk away from the market. So I'm just showing you guys that this was sent out to the team on 07/27 up here, and I'll show you guys that in the mentfx trade ideas, which is accessible as you join the team, which you get all of this stuff, all the course content here, you know, beautiful, beautiful stuff. You know, it was sent right here. We spoke about it exactly, what we're looking for, the trades. We started taking some trades as we went, and you can see that I even snapshotted this to understand how clouds of liquidity work, right? Most people are looking like this, and as you can see, most people that are looking for that are getting cleared now, and hopefully, as per our analysis, we keep on making this run up to take out those people. And if it doesn't happen, then you guys know that that doesn't mean that we're losing money. This is a very, very important thing to remember. So we assume absorption of this zone right here instantly, and we start looking for our accumulations long. And now come today, Monday, our absorption begins to deliver, right? I'm going to show you what I saw this morning as I logged on. So this morning as I logged on, we were around these points here, Monday 31, 6 a.m. or so. This is around when I got on. And very simply, what I look for in ICIs, an impulse, correction, impulse, simply, is clean impulses that are showing me directly where money's going. That isn't hard to tell. You know, it's not like a wiki, a little bit choppy. It's like, clearly, here's where money's heading. I want to see it sideways, whether it goes sideways or down sideways. And then I want to see it impulse again, and I want to get involved on this next impulse. So very simply, you know, ICIs can happen anywhere. Here's an ICI right here, ICI, right? Those are all ICIs. But if we look at this as an I, or this whole thing as an I, right? You can see the impulse here is not clean. It's quite choppy. It's quite wicky. The candles do not move up in tandem together, right? Nonetheless, it's still delivering as per our bullish bias, right? Remember, we have a bullish bias already. Price has come into a higher time from SSC zone. Price is undergoing absorption. Price has rebroken long and is moving long. Price is now making protected lows that are higher and broke down once, which is what? Hopefully you've been watching my channel. It's a reaccumulation model. Again, snowflake style. Price breaks the high in this case, but that doesn't even matter. So it's showing us now accumulation as per the mentorship, and we assume price wants to reach higher. However, at the same time, we want to look for clear price that's giving us good entries to actually make money on, so that, you know, when we take on the risk, we are happy to take on that risk because it's not randomized, right? It's not that you have the highest amount of probability in your favor. And in this scenario, this ICI is not clear. It's not clean. And even if it was, let's say, the correction of it is nowhere near that. You can see the correction never resulted in a clean sort of correction or a clean mini tightening correction that then expanded. Instead, it was a big down move. Now let's look at the same thing. So this is why I labeled this week when I sent this. Let's look at the same thing on gold now, because remember, what is gold? What's XAU USD in reference to GBP USD? It's a basket of goods. We know that XAU USD, even if we don't do all this crazy analysis, is underlying bullish because it has the same basket of where it relies. So if we go to gold now, you can see why the analysis that I sent out when I sent this to the team was very, very quote unquote simple. Okay, so when I sent this out, right, there's nothing crazy about this analysis here, right? This looks very simple. Actually, wait, let me find if I can find you a better photo. Yeah, there we are. So this is like a better photo that I shared with the team right here, right? This is all the analysis I did this morning on gold, just so you guys know. I didn't go and do all that shit I just showed you because I understand the basket. I understand that on average, it's doing the same thing. So you can see, funny enough, the labeling is GU longs, right? So what you'll notice, this is where relativity comes into handy. This is where I labeled GU longs. If you notice, that's the same point that the GU had labeled absorption. So I know that on average, GU is undergoing absorption, accumulation, reaccumulation, it wants to move higher, but the most recent moves are weak. So if this is all the market was doing, I wouldn't even trade today. I wouldn't touch it. But at the same time, in the same basket, gold, the same low, right? All I'm doing is I'm just drawing that same thing. Instead of writing absorption, I write GU longs because I remember, basket-wise, GU or XXXUSD, you could just do it like this as well, are moving long. So there's that absorption. I don't care where this is hitting now. What I need to understand is that they're moving in tandem because they're a basket. Price begins to move long, and today as I get on, here's that exact same move. Now let me ask you once again, is this move here clean, choppy, clean or choppy? On average, you're going to lean more towards clean. And the reason for that is because there are momentum moves higher, small pauses, momentum moves higher. That's already a much cleaner and stronger move. So that's what I shared with my team today when I sent out this, right? Sent out that exact thing where the initial move was weak, and this move here from this low to this high before I was in a trade was strong, okay? Very simply, that's how you view relativity within baskets. This alone can be enough to go get you funded and all that fun stuff. Please remember that. Right, you're not going to get education like this almost anywhere else. I've never seen shit like this. It's been crazy because I spent like 10 years of my life going through dog shit. So please use this to your advantage, and hopefully you're watching the whole video, okay? So very simply, I'm also going to ask you about the ICI now, right? So we understand that this is that absorption on GU, and price is now moving long, or we assume that in general, because of the snowflake rule of accumulation, reaccumulation, we can go long, right? Notice something interesting. At the moment, the range that gold is in is from this high to this low. Is that a bullish or bearish range? It's actually a bearish range, but I'm still going long. And that's because I understand that a structure does not define the money. okay? A context, right, which is what I teach in the mentorship and all that, is what defines where the money wants to head. And that basket now helps you decipher where you want to go. So you understand that when you break down, it doesn't mean it's bearish. It means it could be a reaccumulation, which is why these start working very well. When this breaks down, I don't assume bearish. I assume accumulation or reaccumulation as part of this section 1, which is what taught in the mentorship, institutional leg, with an absorption. Doesn't have to be a high or low, right? Similarly, as GU is happening, because that's where my main analysis is. But the only difference is as GU is reaccumulating and moving long, it's not doing so in a clean fashion. And at the same time, you can see EU, it was a little bit better, right? But you can see it's still pretty ugly. And the trades here still worked. If you entered this long, this is already delivering very nicely. But gold at the same time, look at this move. This is beauty. That is when we realize we have relative strength and we stalk for an ICI. We start searching for an ICI because simply all markets on all time frames move in an ICI. Whether like that, whether like this, whether like that. This is how all markets move for ICIs. They're very repeatable. The only problem though is you need to decide when it's best for you to trade these or look for them, because if you're just trading it anywhere and any time, you're going to get wicked out on weak markets, right? That is why it's so important to do this relativity thing. So clearly, this is a strong push in relation to this, right? Very different, very strong. And they're undergoing the same thing. This is why you have it labeled here on gold for GU or XXXUSD longs. That's where it's coming from. That's that absorption. And now we're moving long in what looks to be a bearish market or a bearish range, but it doesn't matter because the money's already shown us what it wants to do. It's a very important part because many people think that when they see a breakdown, that's it. They need to wait for a break up or they need to start trading the short. That is where clouds of liquidity form. In general, when I entered this today, the understanding is that people want to sell here, they want to sell here, they want to sell here, they want to sell inside of this imbalance, inside of this imbalance, inside of this zone, and then maybe above this high as an absorption. What is that forming? No matter who you are, smart money or retail, this is what clouds of liquidity look like. That's where the money lies, at least in our mind. We don't know if that's the case. You can see this is live price. I don't know if it's going to keep reaching, but this is how we ascertain general context markets, and then we follow them month after month after month, waiting until it actually wants to truly break down, right? We are actual trend followers here, which goes hand in hand with what I try to make available. So if you guys go to mentfx.com, I'm gonna do this very quickly, which is what I try to make available and show you guys firsthand here. So go check out the website, have a good read of this. It's gonna help you a lot. Let's skip that now and let's get back into this. So ICI, we're looking for a clean one. This is the clearest one and it's showing the clean bullishness, right? We don't care about the ranges it's in now because this is showing that same move, but with clarity. So what that's showing you is that big money is supporting that move on gold much more than it is on other pairs, which means that if there's going to be a move, the cleanest move is likely going to be where? On gold. And all of a sudden you have an IC, a very nice correction. Take a look at the differences in corrections. Take a look at the differences at the corrections. Take a look at the differences of the correction. One is showing you that there's money already just steamrolling in. Every time gold comes out, buy it up. Comes out, bought up. Bought up. Comes out, bought up. Right? It's showing you not only on the move up that money's coming in and moving it higher, but at the same time as all the other basket of goodies are moving down and fucking off to the downside, it's being absorbed to the living shit by big money. That's what smart money, whatever you want to call it, looks like. That's what the composite operator or big money getting involved looks like. So that's the IC, and very simply, as this candle begins to expand, I enter it at around this price. Again, you want to basically envision if prices were to start gripping out of a consolidation, at what point is it truly a breakout that now may want to continue for its next impulse, right? Because ICI, your goal is to get involved around here in anticipation of this move. You don't want to get involved here or here, right? Because that could mean it's a bigger correction, then the ICI happens here, right? And then you want to get involved here. You need to understand and anticipate where that breakout is happening and at what point you're willing to get involved to put on risk. And very simply, my risk point where I was willing to put on risk on was right here on the 15-minute. I entered the long and price began to expand. I took a quick partial and then I trailed a partial with it and got out with a plus 1.8. Now again, I'm looking to catch stuff in between. That's how I trade, because I'm a trend follower, so I understand that I don't have to be there for the whole thing. And also, I'm always happy with taking at least a 1.2 or more RR gain. So I'll try to manage my trade the best way I can to gain 1.2 or more. Sometimes I'll gain 1.8, sometimes I'll gain 2.5, sometimes I'll gain 2.3, sometimes I'll gain 3.2. It just depends on the trade. And the reason for that is because I know my win rate on average is around 50% or just a little bit under, which very simply means that, let me go here. I'm going to open up something that I share with the team. Give me 1 second, guys. So again, you have endless amounts of tools available in the mentorship, of course. Tools from data collection, Google Drive docs, all the crazy shit that are important. My own copy. Here we go. Right. So very simply, this is also made available. We're going to go to inputs here. So very simply, what you need to understand is that, and people don't understand this, but if I'm looking at my 50% win rate, and on average, as you can see here, I'm looking to secure about 1.5 to 1.8 on my trades or more, which is my usual go-to, and I'm looking at around a 50% win rate, let's say with a starting balance of, we'll do 100K just for the sake of it. And again, if you want to go get funded, mentfunding.com. Right? So if we're looking at this with a starting balance of 100K, 50% win rate, 1.5 RR, well, on average, you can take a look here. After 100 trades, you're going to be already making money, right? This is why it's so important to understand win rates that you're working with and your actual returns, right? And these are just randomized just because, let me show you. So every time I press Control R, right, we're just reloading it. It's randomized. You can see that no matter how many times we randomize it, the system underlying is still profitable. So as long as I can maintain 50% win rate or a little bit under with a 1.5 or higher RR gain per trade, which is what I maintain for myself, I'm going to make money, right? So over 100 trades, here's what happens. If we keep going over 250 trades, continues going. Over 500 trades, the same thing. Over 1,000 trades, great. Over 2,000 trades, etc. Now, again, this is not always representative of what you would actually do, of course, because of scalability issues about how that would work. But this is a showcase that the math behind the system that I'm executing is going to make money. And this is what you need to do as a trader. This is why I sell my mentorship, all this stuff, is I want to get you thinking like this. I don't want to get you thinking like most people do, where they think 90% or 100% win rates are actually good, because in many cases they're not, but you just don't understand why that's the case, because you haven't studied the actual math. So at that point, the strategy won't actually matter because you haven't done the necessary studying prior. So just remember that. It's a little bit of a nuance. So I'm happy to take this. And lo and behold, right, we just get an explosion and it keeps exploding, but that doesn't even matter. But what's beautiful is notice the kind of explosions it had after. Take a look at these and then look at the same on GU. Look at the same on EU, right? The explosions are nowhere near as large, even though they're doing the same thing, right? This is that same low. Here's your GU longs, right? It's the same thing. Starts going long. But it's not clean. The move is not clean. So it's likely not going to have money come in the way that something that is clean is going to have money come in on. GU is the cleanest in regards to the absorption, then starts going, but then it gets not so clean around here. And at the same time, gold, even though the absorption isn't the cleanest, the actual move itself at the time of setup, which can be during a liquid session, just like today, I traded during New York, that's where the good setups are. And all of a sudden, lo and behold, you have a beautiful expansion. So very simply today, all I wanted to do is talk a little bit about relative strength and how to actually think about it and find it in regards to baskets of good, rather than the way that you've probably been learning, which just, I don't even know what the fuck people teach out there. So this is how you find relative strength and understand what to trade. Secondly, this should disconnect this idea that you need to focus on one pair. I'm a gold trader. I'm such a strong gold trader. I love gold. It's like, it doesn't matter. You need to understand the basket. You trade the basket. You trade the best basket, right? You don't need to do this thing where like you're only a gold trader and yeah, that's your identity as a trader. It's like, it doesn't make sense. As a trader, your identity should be to follow rules and with positive expected value. If you can do that, you're going to make money. That's the most powerful thing. So start looking at markets as a basket, understand what they're doing in general, start comparing them to see which ones are the strongest in regards to the actual move that's happening for your specific setup, and then get involved with that, because then the money's going to come in with you, just like it did here. Now, it's not always going to happen, but this is one of the most important and strongest tools that you can personally use to take your own trading to the next level. And then if you're ready to take it even further to points you couldn't believe, you'd be like, what's going on? I mean, you already know. the mentorship is for you. All right, I'll see you all in the next one. Mwah. Goodbye.